Good morning, everyone, and welcome to the Haven Pre-Purchase Finance webinar. Before we begin, I'd just like to let you all know that we are recording this for anyone who can't be with us today. Thanks for joining us and allowing us into your homes and your lives on this beautiful sunny Melbourne Saturday morning. Today, we'd like to bring you the Haven Finance webinar. Haven's our upcoming project for townhomes in Altona North, releasing soon, somewhere through spring. So stay tuned for emails and information about the release timing. But today we wanted to give you an insight into finance and pre-planning finance. We will be having a limited release, and so for those that want to jump on and secure one of the limit opportunities at the start, important to understand finance. With us today, we've got Mark Palatkinson, who's an independent mortgage broker. Mark's the director of a company called Mortgage Domain. And we're really blessed to have Mark with us today, who will take us through a presentation and give us all some understanding of the steps needed to be prepared and finance ready should we wish to purchase the moment we launch. Stay tuned. We'll hear from Mark shortly, and then at the end we'll have some questions that you've pre-submitted, and/or we'll have time for you to pop questions in the chat section, and we can answer those at the end. So thank you, Mark. I'll hand over to you.
Good morning, everyone. Thank you for making the time to join us today for this finance information session. I thank you very much for the introduction as well, Brendan. I'm just going to start by going into just a quick introduction of who we are and what we do. So, as Brendan mentioned before, I am the director of Mortgage Domain. We lead a team of brokers, 15 brokers that work in Victoria, and we specialise in construction finance. We have access to about 45 different lenders, and we work very closely in new homes or new construction. So the first thing I want to start by covering off is how to get finance ready. A lot of people tend to start the process and the journey by doing a lot of online research, which is always a good way to start. But I definitely recommend speaking to a broker or a personal banker just to sort of go through what it is exactly what you're looking for. Online calculators are generally a good way to start, but they're not always an accurate assessment as to what you can actually afford. A lot of lenders will tend to lend you quite a lot of money, but it may not be in line with the budget or what you can actually afford independently. So I would definitely recommend sit down, go through your bank statements, go through what it costs you to live every month, and obviously what you can afford to pay back as a mortgage. Just with regard to your deposit, every bank will have a varying amount as to what you will need. The minimum deposit with a lot of banks is about 5%, but they can require more on occasion. So just be mindful of that. Sometimes they do lend you up to 95% of the property's value, but that can also include lender's mortgage insurance. So you just want to make sure that you budget enough deposit to cover the mortgage insurance costs as well. Another thing that the lenders will look at is genuine savings. So genuine savings is a savings pattern that the banks will want to see that you've accumulated over a period of time. Usually that figure will need to equate to 5% of the purchase price. So hypothetically, if you're purchasing for $600,000, the banks will want to see a savings pattern of about $30,000 held in your account. The period that they want to see that history would be about 3 months, but it's not to say you need to save the entire amount in that 3-month period. It can be a longer period of time. Another popular option these days is the guarantor loan. So if mum and dad have a property and they're willing to put their house up as security, guarantor loans will get around the deposit requirements, but also the mortgage insurance costs as well. So once again, if we're looking at a $600,000 mortgage, mortgage insurance costs, if we're borrowing 95%, can be anywhere from $20,000 to $25,000, depending on the lender that we're looking to go with. Having a guarantor in place will definitely get around that cost and avoid that for you. One of the main things I'd like to also recommend is that we do a credit check. So credit checks these days have a lot more data that's available to you, and it's not just as simple as knowing who you've applied for credit with. These days we have what we call comprehensive credit reporting, and that will actually show the bank the data of your repayment conduct for the last 12 months. And a lot of banks do actually take this into consideration when they make an assessment. So I would always recommend do a credit check so you know exactly where you stand financially, and obviously which bank's going to work best for you as well. Every Equifax score or a credit check will have a score for you, and some banks will have a minimum amount of what they need to get you finance approved. Another thing that lenders will be looking at these days is your living expenses. So they can ask for anywhere from 30 to 90 days of your bank statements just to go through what it costs you to live every month. So every bank or every client will have a different amount of their spending habits. And obviously the more you spend, the less you would be able to borrow with the banks. So just be mindful of that. Have a look at obviously any sort of unnecessary expense when you are looking to take out a mortgage. One thing that we see quite often is when we do talk to our clients, they're a little bit unsure about their income and what the banks will use. So we can definitely use things like overtime, commission and bonus income, but the banks won't always use 100% of that. So another thing to be mindful of is every bank will use a different amount of what that income is. So some banks will use as little as maybe 60% of the overtime, or they can use as high as 80%. So once again, if you're not getting the required amount of money from your particular lender, it's always good to engage a broker who's got access to different lenders and give you different amounts of borrowing capacity. But once again, it's all about what you can afford. Just the importance of a pre-approval. These days, finance is obviously getting a little bit more challenging. Banks are asking for a lot more information. So definitely before you are looking to commit to make a purchase, I definitely encourage that you have a conversation with a broker or your bank and just go through the application process. They can take a little bit longer in the COVID environment, so just be mindful of that as well. Usually the time frame with some lenders could be anywhere from 3 days to about 2 weeks. And just the last thing I'd like to cover off just on getting finance ready is mortgage insurance. So a lot of people have probably heard about what mortgage insurance is, but may not understand its purpose. So mortgage insurance is basically an insurance policy against the bank's money when you borrow over 80% of the purchase price. So typically the higher you get to 95%, the more expensive the mortgage insurance will be. But it is in your favor to obviously save up more deposit. So if you can get, let's say, a 10% deposit, the mortgage insurance is going to be a lot less than what a 95% loan is going to be. And obviously the closer you are to 80%, it'll obviously reduce as well. And just to add as well, mortgage insurance is a one-off cost. So it's not like it's recurring every year. Once the loan settles, you don't have to worry about paying it again. So I just want to spend a little bit of time talking about the current environment and COVID and I suppose the changes that have sort of come about. So one thing that's definitely been affected is the lender timeframes. The lenders are definitely taking a lot longer to assess applications. I would put it down to obviously everyone's sort of working from home, a little bit of inefficiency there, a little bit harder to get in contact with certain bank assessors as well. And also there's been an influx of applications and people sort of wanting to take mortgage deferral repayments as well. So this is obviously adding to a bit of time with the lender's assessments. People's borrowing capacity has reduced over time due to the COVID environment. So a lot of lenders used to take typically about 80% of your commission and overtime. That has reduced in most cases to about 60 to 70%, which means you can borrow less money. There are some lenders slowly starting to sort of increase the amount that they will take for these additional incomes, like overtime, commission, and bonus. So hopefully that'll sort of help improve people's borrowing capacity over the coming months. Lenders these days will also want to see more current or up-to-date information. So we used to be able to supply banks with pay slips anywhere from 4 to 8 weeks old. These days they're asking for the most recent pay slip. The reason for that is they want to ensure that the people that they're assessing for finance are still in a position or still working in their jobs. A lot of people have also now been receiving job seeker or job keeper income. Job keeper is something that some banks will consider. They do say that they will take it on a case-by-case basis. So it's not always the case that they will take it. The lenders will want to see a return to work plan or the client's employer having the intention for the client to return back to their normal capacity at some point. But it's, once again, it's not something that they do take each and every time. They just want a little bit more history as to what the overall position is going to be. We do have an introduction of open banking, which has sort of come into play in July this year. It's only really available with the big 4 banks at the moment. But what that is basically the ability for banks to see what's happening in your bank account, even if you're not banking with that particular bank. So hypothetically, we go to, let's say, Westpac, your day-to-day banking is with Commonwealth Bank. They've got the ability to see what's happening in your other bank account in real life, in live time. and it's just giving the bank a lot more information as to what your spending habits are and expenses and all that sort of thing. We're seeing a lot more lenders coming into the market these days with an online presence, so online lenders, and also what we call neobanks. These are basically digital banks that have a lot more sort of technology that's available to them, which means they can issue approvals faster with a lot less supporting documentation. So a lender like 86400, basically we don't need to supply them any pay slips or bank statements. They just basically do a data scrape and issue approvals within 24 hours. So this is obviously revolutionizing the banking system. I do want to talk about now just the government incentives that are being made available to buyers at the moment. So obviously, if you're a first home buyer and you purchase a property that's brand new, never been occupied, or up to 5 years old, first time being resold, you would be eligible for a $10,000 government grant, provided the contract value doesn't exceed $750,000. You do also have access to the new home builder scheme. Once again, the maximum purchase price for that would be $750,000. There is some criteria that need to be met there as well. So you need to be an Australian citizen, and it's also income assessed as well. Another scheme or grant that's available to first home buyers is a low deposit scheme. And that means you can borrow up to 95% of the property's value with no lender's mortgage insurance. This is very specific to a lender, and every lender will have specific spots that are available to their purchasers or their borrowers. So if you are looking at a certain lender, just make sure that they are on this scheme and they do have available spots, because they do get allocated very quickly. And at the moment, for first home buyers and off the plan purchasers, so stamp duty exemptions will apply if you're a first home buyer, and it's based on dutiable value up to the value of $600,000. So if you're purchasing off the plan, dutiable value will normally apply into the land value anyway, so you should be eligible if you are a first home buyer. So now we've spoken about the preliminary sort of journey of finance. I want to talk obviously from the time that you're signing a contract up until the initial settlement date. So I just want to spend some time, because obviously from when you sign a contract to the actual settlement could be quite some time away, and you still have the ability to, I suppose, improve your financial situation if you wanted to. Approvals don't sort of last forever either. They normally last for about 90 days, so they do expire. So what I would definitely recommend, if you're in a position to continue to save, let's say for instance you started the journey with a 5% deposit and you've got 12 months up your sleeve from now up until the completion of your home, I would definitely encourage that you do continue to save. The benefit for you would be, one, you would borrow less money, but also if you are subject to mortgage insurance, the mortgage insurance rate will also reduce. And lenders can sometimes discount your rate if you've got a larger deposit as well. Your approval validity is usually about 90 days. That's for a pre-approval. Sometimes when we are in a position where we can actually get a formal approval, that validity can go from 90 days to about 6 months. Once again, that's lender specific. So you do sometimes have up to about 6 months up your sleeve if you are in a position to get formal approval. I also want to review if there are any changes to your circumstances as well. So hypothetically, if you were to change jobs, let's say you can't get finance, you may need to just change the lender that you're dealing with at the moment. So some lenders will want you to be in your job for 6 months, could be as long as 12 months, but there are some lenders that will only want to see you in your job for maybe 1 or 2 pay cycles. So once again, just because your current lender is saying no, that you sort of don't fit their criteria anymore, there usually is a solution outside of that. If you're also having a baby and you have to take time off work because of maternity leave and all that sort of thing, there are lenders that will consider maternity leave, provided that you have the intention to return back to work as well. So if that is income that we're reliant on to assess a loan, usually the lenders will want to see a letter from your employer to say that you're going back to work within a certain period. Also want to do a review of your new debt. So if you take out a new credit card or car loan or personal loan, you always want to make sure that you are disclosing that information to the lender at the time of application or the renewal of your application. They do have visibility of any liabilities on your credit report with the introduction of comprehensive credit reporting. Just with regards to valuation, usually evaluations are normally done at the tail end of the process, so you can't usually get a valuation done at the pre-approval stage unless the home is complete. So usually the Stockland as a developer, they'll give you a notification to say the property is now ready for valuation purpose. So we would engage our valuers and we'll get that valuation organised for you. A lot of lenders these days give us the ability to auto valuation prior to even submitting an application. That just means obviously we're submitting the application to the lender with all the information that's available, which improves the chances of getting a finance approval for you. And that was all the information that I wanted to cover today. I'm going to hand it back to Brendan right now, and I will open up the floor to any questions that you may have about the presentation.
That's terrific, Mark. Thanks very much. Really appreciate you covering that off for everybody and taking everybody through it. Some really great information to ensure that you're pre-purchase ready, particularly evident to any purchase you're making in the house and land, home, residential land or townhome space. But more importantly, for a launch project where launches are specifically done with limited product upfront, and for those that want to be ready to capture initially in that first wave release, very important to be pre-purchase ready. So thanks, Mark. We really appreciate that insight on behalf of Mortgage Domain and Stockland for all those that are with us today and those that will listen to the recording. We have had some questions come through and we thank you for those. First question that's come in, I might answer myself while I'm here. And the question itself is, do I need pre-approval to put down a deposit? The short answer is no, you don't need a pre-approval to put down a deposit. However, in order to take the continuing steps from initial deposit to balance of deposit and through to securing a product and then going to contract, then we would ask for finance health check, a letter of eligibility, or a pre-approval in order to take the next step and go to contract. So short answer is not initially, but in order to continue through that process, the answer would be yes. Second question we've got, which I'll throw to you, Mark, in a second. The question itself, do banks have a suburb risk profile? If so, how does Altona North fit into the risk profile for Haven? Mark, over to you.
Yeah, absolutely. So lenders will have a risk profile with certain suburbs, but it's normally driven by population or lower population areas. I would say an area like Altona North wouldn't really be a high risk area for the lender. So I would say more sort of regional areas which have a lower population could be deemed high risk. Some of the CBD sort of pockets or towers, when we're talking about apartments, could be deemed high risk, but definitely not in the Haven area.
That's great. Thanks, Mark.
Sorry to cut you off. That would be deemed what we call Category 1, which is the highest category.
Great. Terrific to know. Thanks, Mark. Appreciate that. We've got another question here. Question from the audience. When is Haven launching? That is a really great question. Today, we're going to keep you on the hook. We're not going to give you that information, but we do promise it's not far away. We will be launching in spring. We know spring is September, October, November, so stay tuned for more information coming. We're working on final touches and final packages to make sure that you're as excited as we are. The whole Haven team has, 3.5 years in behind the scenes development for this project, and we really are looking forward to releasing it and launching it to you. So it's not that far away, I do promise, but we will remain just now tight-lipped on what that timing is. We have had another question again, Mark. This would be a question for yourself. Is stamp duty savings or are stamp duty savings applicable even if you are not a first home buyer? Yep.
So the answer to that is if you're purchasing for owner-occupied purposes, you would have to pay the dutiable value at the time of purchase. So what that means is if construction hadn't yet commenced, you would only really have to pay stamp duty on the land component if you are purchasing for owner-occupied purposes. You wouldn't have to pay stamp duty on the entire contract value. That is a little bit different for investors though. So if you are, let's say, purchasing off the plan as an investor, you would have to pay the full amount of stamp duty as per the contract.
Yeah, great. Thank you, Mark. So even if it is your second or third home, so long as it would be your principal place of residence and you are purchasing off the plan, yes, you will receive some stamp duty savings. The closer you get to that home being completed and or when it becomes completed, the amount of savings reduces from day one off the plan through to the point that it's completed. But so long as it's your principal place of residence, yes, you would receive stamp duty savings. That's a really great question. So thanks for whoever posed that question. We've got another one here from the audience, and we really thank you for this one. Pricing, it's in relation to, and what are the price range of our homes at Haven. Again, you know, we've got a great range of 2, 3 and 4 bedroom products that will be coming. And, you know, entry point pricing will start from approximately $600,000 and go up from there. So $600,000 for 2 bedroom and up from there. So stay tuned for more information and more specific information. You can reach out to the sales team, and on the bottom of the EDMs you receive, the emails, and on our website there is contact information. You can reach out to any of the sales team, and we'd be more than happy to take you through that, particularly if you'd like to learn some information as we're coming up towards launch. So thank you, great question. We've received another question. Somebody just wanted to check and confirm that Haven is an off the plan purchase. And I can answer that myself and say, yes, it is off the plan. It is an off the plan townhome development brought to you by Stockland. And there will be a range of products that we'll be delivering that are all off the plan. So that is correct. Don't forget that you know, we're coming up near 11:30 now, so we don't have a great deal of time left. So anybody who has submitted questions that we might not be able to get to today, and again, we do apologise for if we don't have time to answer them today, but we will come back to you via email and other means in order to answer all of those questions for you. So don't be alarmed if we can't get them today. And of course, you know, this will be recorded in case you've missed or want to recap any of Mark's presentation in relation to bring pre-purchase ready, and or if you wanted to double check some of the answers we've provided to the questions given. Let me just check with my back-end team. I don't think there's any more questions just yet. So on behalf of all of us at Stockland and Mark and his team at Mortgage Domain, Mark, we just wanted to say huge thanks. You are independent and this is your own time, you know, weekend work time and family time. So we appreciate you coming on to be able to provide our future customers the insights in relation to being pre-purchase ready. So Mark, on behalf of Stockland, we thank you. For myself, my name is Brendan and I'm part of the team that's lucky enough to be bringing you Haven. It's an amazing, exciting project that will be coming to you shortly. I'd like to thank our back-end team, Ben and Eugenie, and the development team for helping us. If you have any questions, please reach out through our website or through social media to the Haven team, and we'd love to help you and assist you and potentially aid you, you know, finding your next home at Haven in Altona North. Thanks, everybody. Appreciate you letting us into your home. Stay safe and have a happy Saturday.